Okay, 10 o'clock, let's get going. Firstly, good morning, everybody, and welcome to our 6th webinar in this series, exploring how tax technology can help you. As always, just a couple of very quick housekeeping points. Today's session will be recorded. There is an opportunity for us to ask questions of your panelists today. If you can, please do that via the Q&A option in Zoom. That would be really appreciated, and not the chat. And as always, there's going to be a follow-up session from today's topic for those that want to have a deeper dive. So we will send round invites for a 90-minute deeper dive after today's session. And we will be keeping it to 30 minutes. So without further ado, I'm Ian Bowden. I'm the tax partner here at BDO's Tax Automation Group. The purpose of this series is to help us explore the art of the possible. We wanted to run these webinars to help raise awareness of the great options that are available and help you find a better way to stay compliant. I have the easy job with these sessions because we pick a different topic each month and we have a special guest. We've covered quite a bit of ground so far. We have recorded all the sessions, so if you are interested, please do check out those videos on our website. Today's session is another incredibly topical one and forms part of our series of events where we're asking the simple question, how was your year end? There's been a number of LinkedIn posts that we've put out, which include a short questionnaire. We would really appreciate your help in completing that. If you can, spare us the time, just to help us understand your issues better. We will include a link to that questionnaire for today's follow-up event, and all of that information is absolutely on our website. So joining us today, I'm delighted to have Kathryn Abate with us, who's from Longview. And Longview is part of the Insightsoftware group, one of the leading tax provision providers on the market. She's going to be talking to us about Longview and talking to us a little bit about how Longview helps with tax provision. So thank you ever so much for joining us, Kat. Really do appreciate your time. Before we jump over to Kat, as always with these sessions, we do try to provide a bit of a market overview of today's topic, which is an area where many are still using Excel. And joining me this morning to discuss all things year-end is Ashan Majumdar, one of our senior implementation specialists. Over to you, Ashan.
Thank you, Ian. I am Ashan Majumdar, a senior manager in the tax automation and innovation team. I have a strong background in implementation of third-party solutions like Longview. As part of my role, we talk to clients about their processes, their struggles. Today, I wanted to give you an overview on our experiences. The overarching theme we're seeing is that technology in the tax sector is shifting from a nice to have to a need to have. And there are 3 key reasons for this shift. These are, first, shortening of the close period. Typically, clients have had to report provision tax numbers on workday 9 or 10. We're now seeing this shortening to workday 5 or sooner in some cases. Second, risk management is another one that is causing a lot of issues in the market at the moment. We are seeing auditors beginning to pay a lot more attention to the tax numbers, and we're seeing a lot more questions around the processes itself rather than just testing out of the outputs or controls. We're also seeing cases of HMRC raising inquiries where the tax return has material differences to the CT forecast in the accounts. And finally, the third area is Excel. Excel works great as a middleware, but cannot be the panacea. It certainly cannot replace an enterprise-grade solution. Additionally, 80% or more Excel-based models are known to have errors in them. Clients are therefore investing in technology to help standardize and to do things faster. This also allows system-based controls, thus mitigating risks, some of which I have alluded to. To bring this to life, a Swiss client approached us recently to help them transition from an Excel-based model to a more robust enterprise-grade solution. They had a decentralized process with several countries outsourcing their compliance provision to an external provider. They were struggling with inconsistent information, both in data extracts and within their processes. This, coupled with changes to information, often late in the day, was making things worse. Posting these late adjustments to the correct entity was simply impractical. They used to post large topside adjustment and then later spend considerable time unpicking and pushing down these late adjustments to the correct entities. Fast forward a few months, despite some challenges with the wider finance transformation project, we have implemented an enterprise-grade solution. We also took the opportunity to fine-tune some of their processes. They now have a greater level of automation and ability to track down those late adjustments much more effectively. They can close faster and spend more time doing qualitative analysis. It also led to reduction in queries from their auditors. We're now engaged with them to develop additional use cases, namely interim reporting, CBCR, Pillar 2, and workflow functionality. And with that, I now hand you over to Kat.
Thanks, Ian and Ashan, and thank you, everyone. Delighted to be able to present to you today and give you an introduction to Longview Tax. So just sort of circling back on what Ashan was talking about in terms of some of the challenges we see organisations having in their tax provisioning and reporting. A lot of it just come back to that manual Excel-based processes, hugely time-consuming, lifting and shifting numbers from one Excel file to another. And as Ashan was talking about, that effort you need to make to sort of mitigate the risks in Excel, that 80% of Excel files having errors, I think, yeah, from my kind of early experience of wrangling Excel for tax reporting, it's definitely true. And sort of waking up in the middle of the night wondering, oh, wait a minute, did I fix that issue I crossed my mind in the middle of yesterday afternoon? You know, that kind of stress that it creates over year end of just trying to kind of wrangle those Excel files. And it can make it a kind of unnecessarily complex process, especially when you look at that sort of last mile of reporting. You've got a pyramid of Excel files coming in from all over your organization, trying to glue them all together, trying to get to that end of the reporting process, and trying to be able to take a step back and look at actually what the numbers are telling you, and then produce some sort of format that it's consumable by a wider sort of stakeholder community can be really, really challenging. So as I mentioned, of course, the inherent risk, that key person risk as well, not only the fundamentals of the Excel files and the nature of Excel, but people that actually understand how those Excel files work and the fact they've grown organically over time. And another concern we often see is that Excel files don't really go through the kind of testing and QA process that a standardized solution will go through. So you end up making slightly ad hoc adjustments during year end, which don't really go through that kind of due diligence and testing that you would expect of such an important solution in the reporting cycle. And the challenges of that data all being siloed in different Excel workbooks is the real issues around lack of visibility. It's very hard to compare and contrast across the organization, different regions from one period to the next, comparing maybe forecasts compared to actual numbers. Very difficult to get that visibility of the data, and also fundamentally sort of lack of transparency as well. When you've got ad hoc questions coming in that you need to respond to from the head of tax or from the board or the finance team, very hard when that data is siloed to be able to deal with those situations. And overall, we're creating quite an inefficient process and spending too much time on the sort of zero and low value aspects of the reporting cycle. So to kind of see that in a kind of more of a visual way, and the way that I can compare and contrast an Excel model with more of a solution-based approach, the way that I often sort of present the Excel process is very serial. We've got the finance books closing. We may only have one opportunity to pick up those finance numbers and pull them into the tax reporting process. So we really have to wait until the finance books are pretty much done before tax can begin. And that's really squeezing that time you have to do the tax reporting. Then the local teams are beavering away in their Excel files, each individually working on their entities. You're going to have countries that are efficient and get you the numbers quickly. You've then got those countries and those entities that are always the last ones in, and you're chasing and having to kind of manage that process. And it's not really until you've got all the files together and you've transferred all the data and linked it all together that you can then have a view of the answer. And if some of those material entities are coming in late, you know, it can be the really last hour before you can then see the answer. And it's only really at that point that group tax can really begin to see the story behind the numbers, and maybe have to go back and query the local teams as well for further information or to challenge some of their results. But it's so much of that time is in those first 1 or 2 steps. Very little time is left towards the end. What I want to show with Longview is that we can adopt much more of a parallel process. And actually in this diagram, I often have that finance close box almost underneath the second box there on the right, because we can start taking numbers from the finance system even before really they've finished. Because so much of the processes in Longview will then be automated, as a group tax team, the first time those finance numbers are loaded, you can begin to see what the results look like for your organization. You're still going to have the local teams going in and adding some of their own numbers, but as much as possible, we're going to automate at the very minimum profit before tax for every entity. And ideally for some of the entities, some of those permanent and temporary differences as well. We're applying the tax rates automatically. We've done the return to provision process before year end. So the group tax team are beginning to see the picture very early on in the process. And of course, Longview Tax is doing that consolidation work for us. So we're not waiting for those Excel files and having to pull them together. Longview is doing that process automatically, aggregating, translating the data. So that whole sort of step, that third step in our box above, is completely eliminated and managed by the solution. So your time at year end is very finite, and I want you to make the best use of that time. And I want you to aim, therefore, to spend less time on the data collection and the data wrangling and more time on the review and the analysis and really the value added components of the year-end process. So through the data integration with those finance systems and also automation of the financial trial balance data directly into the solution, then you've immediately got sort of a view of those results. So you might have 30 entities in your group and there may be 2 of you. Or you might have 1,000 entities in your group and there might be 25 people in your team. But either way, it's probably only 10% of your entities that are really making a material impact on your overall group results. And 90% of those entities are just noise and effort you have to go through at year end. So the other thing we think about with our customers is about kind of intelligent, pragmatic automation. For those immaterial entities, let's automate all the adjustments we can, profit number, a couple of key permanent differences, and let's let them flow through the system with minimal interaction from your tax teams and from you as well. What that means is those key 10% of entities are where people are focusing their time because they're the ones that are really driving the group results. You want to spend your attention there, and any manual adjustments that do need to be calculated, share options, pension adjustments, the more difficult calculations, we've got that time to be able to do those calculations because it's those entities that are driving the overall group results. So I don't want you to wrestling with a pyramid of Excel files. I want you to be able to kind of have some headspace, have a cup of tea, take a step back and look at the results for your organization. So creating that headspace to be strategic and insightful and being that strategic asset to the business rather than purely, making sure you hit the deadline and are compliant and getting to that answer. And that's what we've seen a lot of our Longview Tax customers do. So what we're aiming to do is really half that close time, but also reallocate your time sort of to be used more productively and more strategically. So to bring that to life in terms of a couple of case studies, we've got a customer, Eagle Materials. They were previously spending 10 days on their tax reporting process. By implementing Longview, they cut that down to 1.5 days. So it's around the efficiency and the kind of the process around year end. And as you mentioned there, improving the transparency and the controls, taking away those Excel files, putting in a standard solution, standardizing the process across the organization, automating data from the financial systems, and getting to a quicker picture. And then we can see there that last point about automating journal adjustments as well, making sure that not only are we bringing numbers in from the financial system, calculating the numbers in Longview, but we've also got that loop back to the financial systems. So all those key tax account values are also being posted back into the consolidation system. So we've then got a complete view of the information. Another organization we've been working with, United Technologies. They also had a similar process where they managed to reallocate their time. They were spending around about 70 or 80% of their time on the data collection previously, but they were then able to move forward to a process where they were spending more like 70 or 80% of their time on the data analysis and understanding the numbers, rather than the manual data collection and the validation and the mitigating the risk in their Excel files. They also were able to eliminate hundreds of spreadsheets within their process as well, because Longview is sort of lifting and taking so much of that Excel effort away and centralizing it in the Longview application. So what does this all look like within Longview? I wanted to make sure I included a few screenshots and a little bit of further detail about the application as well. So our main focus today, of course, is on the tax provisioning and reporting, thinking about how your year-end process is and how it might be different next year. So I wanted to give you some screenshots. One of the central points within Longview is this idea of process maps that help guide a user through the different stages of the reporting. So we can go from looking at the financial trial balance data through the current tax calculation, temporary differences in deferred tax, through to the effective tax rate. So a user can easily navigate through the process. We can also open reports very easily within Longview, and the ability to drill into those reports as well. So being able to see a report of maybe the effective tax rate for the group, click and expand and see that further information underneath. And that's a really important aspect of Longview, is around that visibility and transparency. Now, we'll see as we continue through, we're looking at a common functions across Longview Tax. So a centralized solution for tax reporting, for interim reporting, for state by state, for Pillar 2, for country by country, for operational transfer pricing. And it's a single application, centralized data underneath, single set of integration of data coming in from other financial systems, centralized maintenance of the application. So it's one place to do quite a wide variety of those strategic tax tasks. As I mentioned already, it's instant and intelligent consolidation and calculation. So as you load that trial balance data in, Longview is going to rumble away quietly behind the scenes and calculate your answers for you. If you make a single adjustment, Longview again is going to make those calculations automatically for you. We've got the drill down and ad hoc reporting and full traceability of the numbers as well, from those reports back down to that trial balance information. Now, there is a place for Excel. There are places where we do need to do calculations offline. I mentioned earlier share-based payments and stock options and pension schemes. There is information we're going to receive from other departments that is in an Excel format. And therefore, we have an add-in which is bi-directional. We can load data from Excel up into Longview, but also report from Longview down into Excel to meet those sort of more one-off use cases. And it's a solution that's been designed by tax people, and we aim for it to be owned and managed by tax teams within the organization. So intuitive editors that allow you to maintain the system. Now, of course, on the horizon, coming to us very quickly is Pillar 2. And again, it's a solution we've created within our Longview Tax suite. So it's going to benefit from all that provision information that we're already calculating. We'll be able to flow the relevant information into Pillar 2. And I think quite importantly, be able to understand comparison of one with the other. Obviously, managing entities slightly differently from a constituent entity and a jurisdictional perspective, but being able to sort of see a walkthrough and a comparison of the two different data areas. And that's adding on to our existing country by country reporting functionality that we already have in the solution. So we can see there are a couple of examples on those new reports we've created and new input screens for the Globee top-up tax report, and on the right-hand side there, calculating the Globee income. And it's really an area we're committed to for the next, I think, several years, getting us from a point now where organizations are thinking about accruals and modeling, but all the way through to that return ready and data Pillar 2 return information that we're going to need to submit. So a solution that will sit nicely within our provision application. And of course, visualization of the data. We've got reporting capability, but I think it's also very key to be able to sort of see the information as well. A picture can be used instead of 1,000 words. So being able to understand at a glance the information that we're seeing in our application, whether it's provision, whether it's operational transfer pricing, whether it's Pillar 2 and country by country reporting, really essential to be able to visualize that information. We also think more recently about tax planning and forecasting as well. We're more thinking here about multi-year forecasting, what-if scenarios. But in this world we're living in now, where things are changing at a very fast pace, I think it's going to become increasingly important for organizations to be able to produce tax forecasts that align with the financial forecasts that are being provided by the corporate finance teams. And again, it supports that idea of being a strategic part of the business, being able to provide advice and guidance and insight to the office of the CFO from that tax perspective. So the Longview approach, we can see that centralized tax data hub in the center, integrating data from a variety of different sources and a variety of different methods we can use to integrate data. What we find is one method isn't going to fix all situations, and therefore we can go from sophisticated APIs back down to using that Excel add-in and various different methods in between. But we're looking at a centralized data hub to support our operational transfer pricing, so cost allocations, profitability monitoring, country by country reporting, tax provisioning and reporting in Pillar 2, but also planning and forecasting capabilities as well. But allowing us to be able to compare that data from the many different processes. Also the ability to feed data out into income tax compliance, so those point solutions we need in different countries to do our tax returns, but also bringing that data into Longview as well to support return to provision and to again give us that central source for reporting purposes. From a kind of systematic point of view, kind of looking at it from a more of a sort of system diagram, what I really see when we look at the introduction of Pillar 2 is there going to be more data sources we're going to integrate with. For provision purposes, it was the EPR and the ERP and the consolidation system. I think when we're now looking at Pillar 2 for those organizations that will apply to, we're going to be reaching further into our organization. But it's really key that this information is centralized and we can see that flow of data from transfer pricing to Longview Tax to CBCR and Pillar 2. And it's that top section that I really want to highlight, the ability to gain insights. What happens if there are tax rate changes? What happens if I make an additional acquisition into my group? How should I be adjusting or reconsidering my transfer pricing positions and methodologies in light of Pillar 2 coming down the line? And using a combination of year-to-date data, transactional data, scenario planning, and budgets and forecasts puts me in a great position to be able to gain that level of insight. So my final slide, and I'll pass back to Ian, just sort of bringing that all together. So I see that real inherent relationship between these different parts of the process. We're bringing in that financial information and applying operational transfer pricing adjustments. We want to be able to do these on a timely basis rather than getting to the end of the year, and therefore having a solution where I can frequently monitor my profitability. I can help to set prices for the year coming. I can think about profitability and transfer pricing adjustments as the basis on which I'm then going to do my tax reporting. Obviously, the tax reporting solution within Longview, current and deferred calculations, effective tax rate, interim reporting, state-by-state functionality, reporting in multiple currencies, a very broad, capable solution around, and really one of our flagship products around tax reporting. And then, of course, we've got the introduction of country-by-country reporting, bringing some of that provision information and then submitting it to our various tax authorities. And of course, spinning from that is our Pillar 2 reporting. Again, there's a logical flow of information through all these different tax processes that gets us to that Pillar 2 position, from estimates all the way to return filing. And then the real importance of having this in a single solution is the fact that there's a feedback loop. The implications of Pillar 2 clearly are going to need to be reported in my tax provision, and also may have implications as to how I consider my transfer pricing. Therefore, if I take some forecast information and adjust it for different transfer pricing methodologies, I want that information to be able to flow through so I can see my provision, country by country, and Pillar 2 implications. So I hope that's given you an introduction to Longview, and BDO and Insightsoftware would be delighted to do a deep dive, more in-depth session with organizations that are interested to really kind of drill into the goals you have within your organization and those challenges you saw at year end and how you're trying to fix them. So let me hand back to Ian, and thanks very much for your time today.
Thank you, Kat. Really appreciate that. That was excellent. So last chance to put a couple of questions through. There is one or two that have popped in this morning, but just to reiterate, as Kat said, we will be sending an invite round for an opportunity to have a deeper dive with the BDO implementation specialists and Kat and the team in terms of the Longview product itself. So please do let us know about those. A really good question, Kat, has come in, and it comes up quite a lot in terms of people starting to think about making tax digital and the integration between other elements. So what you've talked about today, we've covered transfer pricing, we've covered provision. The questions come in terms of how does data get exported out into perhaps other products to do the tax calculation side of things. So if you've got organizations in the UK, we're going to have to find a way of getting some of the provision numbers into the return software to do the CT600 side of things. How does Longview handle that?
Yeah, absolutely. So Longview's background as a sort of EPM solution, we're used to bringing in data from a variety of different sources, and the methods we use to bring in data, we can also use to push data out of Longview as well. So whether it's using our Excel add-in, whether it's using a flat file of text, whether it's using an API, I think all our solutions these days are working with different sort of interfaces and APIs. That means that we can pass the information to another system very easily. So from another system's point of view, it's like it's coming from one of the finance systems within their ecosystem. And therefore, yeah, we could pull out entities for the UK and put them through to one source corporate tax, entities for Germany and maybe pass them to Dative, whatever might be the different point solutions that are available in different countries, giving you that flexibility to have a variety of different compliance solutions across your whole organization.
Yeah, I think it's a really interesting point, and we see it obviously quite a lot because people are looking to consider the stat accounts, the tax provision, and the returns as kind of one, where Longview is obviously helping is the kind of the data piece, and then being able to kind of pass it back and forth across to the various calculation tools, because there is separate calculation tools in each of the countries. I've got another question for you as well, Kat. We prepare a separate divisional consolidation, and each has slightly different data inputs, some NetSuite, some TBs. I guess we've covered some of this. Is it still possible to tailor the software?
Yes, it's quite common for organizations to have maybe a consolidation system or two, but also want to bring in data from different ERP systems as well, because obviously the data is more in depth and sort of more relevant for tax. So yeah, we are used to bringing data in from a variety of different source systems. And then within Longview, you could even have different chart of account structures for different parts of your organization. You might want to harmonize and transform the data when you bring it into a single chart of account structure. But actually, if you are almost creating quite independent divisional consolidations, then you might want to use Longview for almost two different parallel consolidations. So NetSuite information coming in and calculating you an answer, and then other data coming in from Excel or from another third system and bringing it into Longview. So yeah, well, class is sort of agnostic to your data source, and when you bring the data in, we can think about how you want to then deal with it in our solution. But yeah, lots of flexibility there.
And it's interesting, Kat, you and I have worked on this stuff for quite a while. The utopia when we first started doing this stuff was people talking about almost a closed loop, getting data from their systems, getting it into a Longview type solution and getting it back into their solutions. And not all organizations kind of want to completely kind of close that loop and automate that, but there are some that do. So being able to bring in data using the power of Longview to do the calculation side of things. And I do think of things like Longview as almost a calculator, but we forget sometimes that they've got that consolidation capability in there to be able to sort out the data. And then when we start thinking about how our adjustments are going to flow back through, what can we do to standardize those types of adjustments and push them back into the tools themselves? And certain groups are closing that loop, and others are putting a finance person in the middle.
And it's a journey. Some organizations, you know, it'd be wonderful if everyone had one source financial system, but it very rarely is the reality. So being flexible and being able to deal with organizations with different circumstances, and that might improve in the future. You may start off with NetSuite and Excel, and then future move to a situation where you have got a single solution, and Longview can adjust with that accordingly as well.
If you can give us a 5-second answer, Kat, I've got last question and then we'll close it for today. Can it assist with CIR automation?
Remind me what CIR automation is?
Corporate interest.
Corporate interest.
Deduction.
I'd have to think about that. I would suspect so. It's very rarely we can do something that we can't do something, but let me have a check and we'll get back to that person and
Okay.
follow up.
Thank you very much. All right, that's our 30 minutes. Thank you everybody for listening. Thank you for the questions. If there are any follow-up questions, please do let us know, and we'll look forward to seeing you at the follow-up session. So thank you for your time today, everybody, and thank you very much for Kat and Ashan for joining us this morning. Have a good day, everybody. Bye-bye.
Bye.